Good morning, everyone. Happy Wednesday. Welcome to the metal markets. Still need to get used to saying that because I'm so inclined to say welcome to the Euro trade. But it's metal markets, right? If you are new here, I'm your host, Market Stalker D. I've been trading for almost 20 years at this point, and I specialize in commodities, futures, things like base metals, precious metals, and energies markets. Since we're going to have the London Metal Exchange opening in about 10 minutes time, we're going to have a look at what copper is going to do. Before we start, we want to familiarize ourselves with the Topstep risk disclaimer, so please have a read so that we're all on the same page. All right, let's have a look. Copper is rolled. We do have the May contract now on copper. I am currently sitting on a 4-hour chart just to get an idea of what the larger time frames are trying to do. Silver is in rollover, so until that rolls, you probably don't want to mess with it because the volumes will be split between the old contract and the new one. And by the looks of it, it's also going to roll into May, so that's something to keep in mind. I'm also keeping one eye on gasoline futures and obviously crude oil since they're so correlated. At the moment, crude oil is very range bound. This is also a 4-hour chart, and they keep trying to buy it around 65.50, even though we have a very nice level at 65 evens. So maybe if we get to that level, there could be some longs there, even though I absolutely hate being long energies. Because they are short biased. However, it's the time of the year when specifically RBOB tends to go into this seasonal bullishness, which tends to last all the way till mid-May. So that's like one seasonal nugget. Natural gas is something that I have been trading. I was actually short yesterday. And I think until we get the storage, so the inventories report, which is tomorrow, I'm not sure that they're going to be pushing it into any longs all of a sudden, even though there is a blizzard, cold weather, but Natty is very, very quick to bounce whenever there's even a sniff of slightly warmer weather. And their storage reserves are holding up. However, there was a tiny draw last week, so we're going to see what happens tomorrow. So it's probably going to be on the back burner unless it's very late in the day, and maybe I find a trade there. But for now, I'm just focusing on copper mainly and RBOB, if we can get some more interesting areas. All right, let's have a look at what the overnight has done. I'm going to make a copper chart massive. This is a micro, so you will find the VWAP, which I have anchored to Globex open. And it's the open, high, low, close divided by 4, not the default one, which is open, high, low divided by 3. So it's a slightly different one. The full copper is going to have it at a slightly different level, and that's the one that I have on my charting platform on another screen. But at the moment, I'm looking at the very bullish Asia, and then a classic sweep above the Asia high. Then a reversal, now we're hitting VWAP. We're also hitting a pretty big level, which is marked GEX1, but basically what that means is just the, let me put the noise suppression because my watchdog has decided to kick off. So what this means is that there's a lot of open interest in the options chain. And yesterday there was an interesting question towards the end of the stream where the person was asking me, also, do you use like previous days highs, lows, previous session high, low? It's actually the dealers, the market makers that create those. So they create this hedging intraday flow that we see. And even before you get this Asia high, Asia low established, usually you will find there is some kind of an options chain open interest level there. So rather than looking at the aftermath, I will sometimes, or actually on most days, be looking at the options chain as sort of like your invisible support and resistances. And then I also have a way to figure out which one of them is going to be like the anchor point, the one that is more interesting to me. And I'm not going to go into the math of how and why, because I'm going to lose people. But just know that the stronger GEX levels can be the ones to cause reversals. And that's why I really don't fancy going breakouts into those levels. So I will stay on a 30-minute, excuse me, on a 30-minute time frame to make sure that that I'm giving myself time to get some situational awareness around what they're trying to do. But as a general overview, if they cannot go below 6 evens, that will put me on the side of further longs. Let's also have a look at the daily chart just to get like a full picture. Very range bound on the daily, right? Very range bound. And this little supply area, not the highest quality because they didn't really stay away from it for long enough, and they did not exactly have a good follow through. But it will add time. Even if we go higher, it means that the moves resulting through that supply, as it's kind of traversing it, you might see a lot more hedging in and around it. But yeah, so for now, 6 evens remains the orientation point. 30-minute time frame. Asia low, Asia high, so they just pushed it immediately, almost not looking back. This was pre-Shanghai Open. Bit of a sell-off for Shanghai, hitting the VWAP and then immediately going higher. And then, as usual, running out of steam between sort of 2 and 4 my time. That's overnight, so that's AM. And then once London opened, they wicked above it, so classic sweep above the relevant high and a reversal. And now we're sitting at VWAP. So VWAP in this area, it's not a good reference for a couple of reasons. So another thing that I'm going to do here is to put the initial balance high and low so you can see what I'm seeing. So initial balance high, 0310. This is the London related initial balance. And then once COMEX opens, you're going to have another one. And then the low was 60140. So what can we see here? It's a neutral day type. Why do I say neutral? Because we opened up one way, set the initial balance, then they went higher, extending that first hour of trading range, which is what the initial balance is, and then coming back to it, failing the auction. The auction wasn't big enough for me to get involved, and then extending it to the downside and bouncing again. So we're in a situation where we have excess on both sides. Typically excess can be taken out, so I'm not too keen getting involved with these like spiky moves, because the market at some point during the day will retest those. Maybe we can mark it as the London low and then just say, well, this was the London low, and therefore it becomes another orientation point for whether we're sustaining a 30-minute time frame below it or we're bouncing away from it. I do use a 30-minute time frame as my sort of benchmark for decision making. Entries can be done on Bookmap, 2 minutes, 5 minutes, basically whatever I can use at the time. And that tends to vary with me. I do use order flow quite a lot in my trading. And that's another way of trying to time your entries a little bit better and then seeing whether there's follow through as a result. But generally, once I'm in, I like to just commit to the trade, leave it alone. I have a stop loss, and I have this way of scaling in, which is what I've been working on this particular experiment. And then, you just leave the trade alone. My early exits are usually time-based, so they're not necessarily price-based. So for me, it's either time or price. So if we get to my particular target, that's fine. But if we don't, I will exit at certain parts of the day when I expect more hedging to step in, typically around the closes of the exchanges, so London close, COMEX close, and the time frame in and around sort of 30 to 60 minutes as a reference. So that's like a brief overview of how I like to do things. I don't typically trade my stops. If I manage to get tagged out into multiples, then I might drag a one or two out of the six contracts to some sort of a tighter risk, but I typically like to leave the original core position to do whatever it's going to do. And people freak out over that. It's like, it's like if you're over optimizing things too much and you keep changing things and you don't have an early exit based on whatever the market is doing that can be repeatable. If you're just closing trades because you're like, oh God, I don't like the drawdown, that's an emotional decision. That has nothing to do with data. And what I'm trying to test in this combine is the downside as well as the upside. Now, if I go into the stats of what we've been doing, there's been a lot of rangy type days during the COMEX session. And I have been focusing more on crude oil, RBOB, nat gas, and copper. Copper was in rollover, so a lot of the days where I got about 1 hour, maybe like 1.5, but overall it's basically reflected in the average win average loss. Typically I try to keep that above 1.3 or higher. However, the trade win is currently sitting around 57%, so that's kind of accounting for the lower average, and that's what you can expect in range bound days. You're not always going to have 2 hours. You have to adjust your expectations of risk reward in light of the context of the day. So once you get objective and once you're like, you know what, I'm not going to freak out. I'm just going to let it happen. And yesterday was a pretty decent day, but I did have a feeling that RBOB was kind of on a roller coaster. It kept going up and down and up and down. So it's like, come on, really? And it was fun, but also a little bit more work than I fancy. Because I'm a bit of a lazy trader, right? I want to make my money usually in like 3 to maybe 7 trades. 5 as an average. But obviously if it's a range bound day, I will trade more. If it's more of a swing type day where we're coming away from a very big area on the daily or a 4-hour time frame, that's going to be the days when I do like 1 trade. Now, because of the way the platform counts these, you will see trades that are basically 1 trade and it says 6. That's because I basically try doing a core position and then scale in. So every one of the scale ins counts as a separate trade. They should fix this at some point, but we'll see. It's not that bad. It's totally workable. So that's what we're working with. And I'm staying in this combine for an extended period of time. I'm not trying to full port. I'm not trying to pass it fast. It is basically a test of the new scaling in, using micros as a primary vehicle rather than minis, which has been my way of trading for many years. But I kind of feel with all of these new rules and everything that you need to have a pretty solid risk model that can somewhat minimize downside and maximize upside. So what I'm doing here is trying to find a way to position myself that minimizes blowout potential, and also because I do tend to end up in live accounts pretty fast, to make sure that the new rule of 30% drawdown off the top is not really a possibility, or it's a low probability. So the model that I've created here is to have a blowout percentage over a 6-month period of only 10%. Now obviously it's on me to follow the positioning, the rules, and the scaling in points. Since I've gone over 4.5 grand here, there is a potential that I can scale into RBOB, because over 4.5k buffer, my system says that you can scale into RBOB, but RBOB doesn't have micros. It's not like a crude oil. It only has a mini, and that's $4.20. So a little bit expensive. So I'm not sure that I am going to be scaling in until the end of this test. But we'll see. We'll see what happens, right? Now, speaking of copper, if we do manage to go above Asia high whilst we're talking, I will be probably changing my bias to the long side as a breakout and then a further move towards the ADR high, which is currently sitting up at 609, and up at 610 we have another level of strong open interest. So 610, between 610 and 612 would kind of be my max, where I would look to run a trade and take profits. If it gets there without me, I will then flip to the short side, because at that point it's a little bit difficult trying to get any trade that I'm looking for, and I'm looking for 70 to 100 ticks of profit. So I'm not like, all of my scalps are like 35 to 53 ticks recently. So I am somebody who doesn't trade too much. I'm pretty selective with the levels that I want to have as and when I get involved into a trade. So you won't be seeing me clicking buttons like a lunatic. Maybe we do one trade, maybe we don't do any. So it just depends what we have. Looking at RBOB, it is also very, very range bound at the moment. Lots of wicks. So until they decide what they want to do, again, I have to be careful. That call wall that I was talking about yesterday, 225, was an excellent orientation point yesterday. So I did manage to use it about 3 times to find trades in and around it, to it, from it, to it. That's why I said it was like up and down. And you can even see that in the price action. So it went above it, couldn't do anything, short, then back up, and then another short, and then another long very late in the day. I think we had some a Trump speech, there was some Iran news that were coming out, so this product is just like crude oil, very, very sensitive to headline risk. All right, so with that said, let's go back to our little copper baby here. And the first thing that I'm going to do, because the LME is open 8 minutes ago, so this is something I do all the time, I take an anchored view up, and then I anchor it to the open of LME, which my time is 11:40 a.m. Right now it's 11:48 a.m. So just anchor it there. Convert that into your time zone. There are time zone converters everywhere online, and everybody's located at in different areas. So for now we're holding above it, and we're once again going back towards this initial balance low. But this is now not a failed auction yet again. A failed auction can really only happen once, and that's from the top, which has the highest, or from one side, not the top. This one came from the top. But it can only happen once, and that's when you're expecting a full rotation to the other side. If you have a neutral day fade, which is the extension to the opposite side and then another ping, you will find that a lot of those have a limited profit margin. So it's not like it's going to be a perfect rotation, failing and succeeding auctions over and over and over and over again. It's not quite how that works. So the failed auction, when it happens the first time, has the highest probability of rotating all the way to the other side. Now we're in a situation where we're in middle of the middle. We're even touching point of control here. So let's just anchor this to the start of London. So this is now the volume profile. You can even see it here in the volume profile, where the distribution curve is kind of in the middle. That's this purple area. And then we have extensions up and down. So it's kind of telling you the same thing as my TPO profile, which I'm looking at on the other side. So POC is located right in the middle. And at the moment, this is caution, because it's a rather crappy trade location, to be honest. Not good for breakouts, because there's nothing really to push momentum. You're coming into an area of high volume, and nothing much to fade it either. So you have to sit and wait for some better areas to step in. So you need to know when to stay out, as well as when it's time to go, right? All right, let's have a look at chat, because I didn't do that yet. Let's see who's around. Raphael says, you've probably covered this before, but how do you calculate when to scale in and add to the position? What do you look for? So the way I do it, and again, there's a million ways to do it, but I look at the 30-minute MAE and MFE. So what the hell are those? So that's maximum adverse excursion and maximum favorable excursion, which is a really fancy way of saying what is the size of the swing on average and what is the size of a pullback on average, right? So once it starts running in a particular direction, so you basically go and measure a bunch of data to see what size those, whoops, that's not the right tool. And let's go for trend line, because so this is would be like maximum favorable excursion, right? How much down did we go? So that would be MFE. So MAE against that would be how much are we pulling back. So once you have a decent sample size, I like to work with 6-month sample sizes, and I use a 30-minute time frame for that, and then I kind of find a median average, not a mean average, but a median average, and I base my scale-ins in such a way that they won't go over these amounts. So let's say that I'm long. I wouldn't be, but let's say that I am long. If your pullbacks say that this is roughly, you find that roughly pullbacks are about 60-70 ticks. You don't really want to be scaling in past a 60 tick mark, because that means that you'll be overshooting an average and exposing yourself to a possibility of a huge drawdown. There is a lot of data science around it, but the sample size really matters. And then after that, whenever I'm working on scaling in, I want to be in with multiples of something, of micros, let's say, as a core position. Why? Because that means if you then add on, it only slightly amplifies the upside enough to push you into that positive expected value, the EV. But it doesn't mess with the drawdown too much, because you're effectively minimizing drawdown. Because if you're wrong and the trade never gains traction, you will only be either in a core position, or maybe you'll be tagged in once, not twice, 3 times, 4 times, 5 times. So for example, on natural gas, I start with 5 micros and then I add 4. Now with copper, I do start with 4 and add up another 4 if we can. Right now I can only add 2 because of the restrictions. Hopefully that will be lifted at some point, because I think we've gone back to like normal movement. But hey, CME will tell us, right? And it's down to the CME, it's down to the exchanges when they're going to reduce the margins again. And I don't know why they included copper in this whole situation, because, you know, we've had so many more days when tariffs were running crazy. And copper was moving like 2,000, 3,000 ticks a day. And now we had 2 days where it moved 1,800. And because the same was happening in gold and in silver, everybody freaked out. So they kind of chucked it into the same basket. But copper is actually really quite a smooth product, even when it's, in a higher volatility situation. So that's just my opinion. Don't take this, don't shoot the messenger, right? It's my opinion. It shouldn't be included on the restrictions, but hey, that's just me. I'm not CME, right? So yeah, that's kind of like the basics of how I scale in. But anytime you are scaling in double, so that's the bad way to do it. Not necessarily a wrong way, but it's a bad way. Why? Because your average changes completely. And you're effectively adding 100% onto the original core position, and therefore that's not the same trade anymore. So everything gets messed up. And I'm pretty pedantic, I'm a nerd, so those kind of inconsistencies really bother me, as does the huge variance that I was seeing in my own trading during the high volatility. So I'm just trying to tighten all of that up, and we're working with very, very tight risk parameters when we're talking about prop firms. Eventually that yields results and it's beautiful, and you can scale up for, basically zero risk to yourself. So that's why a lot of us stay with prop. But, in real world situations, you will usually be working with, let's say, a starting account of at least 50,000 for futures. And then you have all of that true capital, true 50,000. to maybe run like a 1% position, and that's only if you're not an intraday trader. If you're an intraday trader, I would actually keep that to what I do, which is 0.3% per position per trade. So the more trades that you do in a day, the less risk per trade you should consider, because of the you don't want to blow up very quickly. And that goes for prop as well, right? So if you're somebody who trades 100 trades a day, you can't have size and a lot of trades, because every time you open a new trade, that's going to increase your risk. So if you're risking your money 100 times a day, what's the worst case scenario? What is your risk of ruin? And the more trades you do, the higher the risk of ruin, and that gets amplified with more size. So people that I see coming into the VIP programs, they're doing things like trading a lot on a high size with that tight drawdown. And it's like, that's never going to work. It's never going to work. Like, you might get lucky for maybe like 2 days or a week or so, but that's not scalable. It's not longevity. It's not conducive to consistency. And all it teaches is just bad habits, that it's okay to do so, because at some point you might hit it big. And once you get to a live account stage, which I've been through twice, the rules of the game change. You only have one account. You can't do XFAs times 5. It's a completely different ball game. And if you don't train yourself for it, and if you don't figure out a way to make that part work, then you probably shouldn't go into prop trading, because I'm now seeing. So I've been dealing with prop firms, both old school and online, since 2013, and then we got Topstep, and then suddenly, in and around COVID, we had this huge explosion of online prop firms. Before, there was just Topstep and FTMO, and all of a sudden I turned around, there's like 12 of them, and I'm like, where did these people come from? Oh my god. And obviously there are a lot of bad players, and now it's a whole industry. And someone thought it's a good idea to give people multiple accounts, which on paper is fine, but obviously we've now had YOLOers that have taken advantage of that, and they now even have a name. They're called sim farmers. But what I'm seeing as a result of the YOLOers, the rest of us are now suffering. So what used to be like incredible conditions to scale up your capital, all firms are now taking a step back and realizing that we need to re-educate people. And I do stand behind that. Is it good for the trader? In the long run, it will be. But I can understand why people are super annoyed. They're like, oh my God, you've taken my money. It's like, you have people who have made a significant amount of money, they've never been in a live account. And I always say, when the sim payouts started happening, I'm like, what sort of a weird Twilight Zone did I walk into? What kind of a parallel universe is this where we can take money out of demo accounts? Like, really? And it was great for a while. But the gravy train is coming to an end. Everybody's seeing the flaws of that. And we are trying to almost kind of roll it back to how it used to be. I don't know where this is going to lead, but it's certainly an exciting time to kind of watch the prop firms evolve and maybe even devolve from like the COVID madness where everybody was a day trader all of a sudden. And it's time to go back to some sensibility, and that's not going to be easy. If it was easy, everybody would be in high-performing disciplines. Everybody would be a professional footballer, even if they're not that good. Everybody would be a surgeon, right? Like, why practice? Why go through decades or 13 years of specialization if somebody's going to let you cut into people after like reading the Grey's Anatomy over the weekend? And that's the same level of skill required for high level trading. Not many people make it. It is a very performance based discipline. It takes a lot of work. I wouldn't say that it's like discipline as in like, oh yeah, you have to be disciplined. Yeah, of course you have to be disciplined, but for the most part you do have to have a system that is going to remove emotional decisions as much as possible. But if you're trading a lot of trades, if you're also trading with size, that is, I'm sorry, impossible, because we're humans, we're not robots, right? You care about doing a Muppet moment on the day. You do. I do. Everybody does. So working with that, it means that we have to be super mindful of our positioning, to realize that sim farming days are probably coming to an end across the board, and to start establishing some true rules. And I know that people are not going to agree with me on this because we've had it so good for 6 years running, right? So we have a whole new generation of people who are not even looking past the prop firms into the live markets. And they're the ones who are the most vocal. But they're also the ones, like you have a lot of people who are complaining and yet they've never been in a live account at a prop. So it's like this at the moment, quite frankly, does not concern you, right? It concerns me because I know that I do end up in live accounts quickly. And this is why if I'm doing an experiment, doing a test, it's got a purpose, and it's the purpose of how I intend to run that future live account, not how I'm going to full port XFAs, get lucky, and then, get a ton of payouts by effectively exploiting the beautiful opportunity that they've given us. Okay, so just wanted to put that out there as some kind of thoughts to ponder on. And it's quite interesting to me to see these changes. So we went from a couple of prop firms, one for Forex, one for futures, suddenly a whole bunch of prop firms, everybody becomes a day trader, suddenly these futures things start getting into the focus, and then suddenly you can do multiple accounts, suddenly you can do sim payouts, suddenly you can do 20 accounts, suddenly you can do this, you can do that, you can do copy trading. And now it's going back, right? So it's almost like the mobile phones, first they were, very big, then they got small, then they got very small. I don't know, I'm probably showing my age here, but there was this like one Nokia phone that was like tiny, and you had to have like a pen so that you can actually stab the buttons because it was so small. And then we went through another expansion of and that's kind of how I see the prop world. So we kind of try to evolve, run into issues, then we go back, find stability, and then keep evolving. And that's probably never going to change, because, the industries change, conditions change, and we need to adapt as that's happening, rather than make excuses as to why it's not working, right? And I'm very strict when it comes to excuses. I just don't really care for excuses. So if you are, trading equities right now, let's have a look at ES. It's very challenging, right? A lot of range-bound days. So let's have a look at the weekly chart. I mean, we haven't had this for a long time. I don't remember the last time I saw ES stuck in overlapping values, bracketing, longer than we've been since whatever this is, end of October last year. And even before that, I mean, really, you can take end of September, where they sort of established a high, and then since then we haven't really moved anywhere. This is the first time I've seen it ever since I've been watching ES since 2013, even though I'm not a core equities trader. I have traded ES quite extensively, so I do know it. I just find it a bit one-sided. I find my commodities are much more conducive to finding multiple trades per day because of those double-sided movements that frankly are difficult, but to me that's the name of the game. I like to be a detective. The Real Newspaper saying, love the timing of this show. Perfect. Yes, me too. I can wake up, my brain is working, I can have 2 coffees, I can put my face on, I can get the dogs off to daycare, I can even walk the dogs sometimes beforehand, which is always a good thing, just to get some fresh air and oxygen into me. But yeah, so if you're trading equities and you're struggling, it's because it's very range bound. So this is where failed auction and neutral responsive days, meaning days where we do have a range and it's not really doing anything. Maybe don't look for breakouts, look for failures, look for liquidity sweeps. So, look at the 4-hour time frame for context. Look at anything that can give you an idea of where this range is coming from. So right now, if you look at the 4-hour time frame, we go back to 20th of February, that's where we're coming into, right? Do we have some option level there? Probably. So let me just drop down to Hello, time frame. Sorry, that's somebody riding a motorbike. Because I do live next to what's called a B road. It's not like a motorway, but it is a pretty fast road. And sometimes you get these crazies who are just. Alright, so we have a gamma wall at 69.25. This is futures outright. So I'm not looking at SPX, I'm not looking at SPY, I'm just looking at core ES options. And if you take the 4-hour context of where we are, I also have a GEX2 level, which is also a high open interest level. So one idea here would be that they try and wick above this and then go right back into that range. However, if the 4-hour time frame sustains above it, then maybe you go back to this range, right? However, for now, the volume is just pitiful because we're obviously out of hours. But, you know, even if the volume comes in and they wick above 69.31 and then they fail to sustain it on a 30-minute time frame, first and foremost, that would be like your first sign that we're back in the range. So for those who, you know, usually watch me stream, they sometimes go, gold on a run, and I look at it on a 30-minute time frame, and it's literally just moved slightly in a direction, and I'm like, I really want to know, like, what time frame are you looking at to call this a rally? Or a trend of any sort. It's like, let's zoom out. Let's zoom out and just get the context from, at the very least, a 4-hour time frame. Some people like 1 hour. I would say that that's not enough, because especially not in range-bound markets. Because look, on a 1 hour, this looks bullish, right? So if you're just somebody who doesn't really do much of the looking to the left sort of analysis, this looks like it's breaking out. It's like, right, let's go, right? Let's go. But really, what is your profit margin if they're going to wick it just above 31 and then come back? What have you got out of it? You've got a scalp. And that's not a bad thing. It's just that for me, I look for long-term rotation. So that's how I can catch swings that go for 300, 400, 500 ticks at a time. Not every day, of course. We have to be in a very special situation for that to happen. But when the opportunity is there, this sort of analysis is what helps me find them. But if we are range bound, if we're just not really breaking out, I will look at the 4-hour time frame to see where the next pain point is. Then I will match that with the gamma levels from the options chain, and then I will smush that into a hypothesis. So I will not chase a breakout into 31. In fact, I want to be in on the hedging dealer side when they show up, for which I use tape and order flow. I look for absorption. I look for small divergences in cumulative delta at that point. And of course, I'm looking at the opposite side, the big bubbles, or big bulls as I like to call them, to come in, to step in, get your mind out of the gutter. To basically step in and to bring us momentum to the opposite side as that kind of failure to advance, right? And it's a very useful thing, and it works across the board. It probably works even better in commodities that whip around and can be quite range bound, but yet on RBOB you have, like currently what do we have? We have like a 500 tick average range. So if you can even grab like a fifth of that, 100 ticks, you can probably find like 3 or 4 opportunities in a day. But it's trickier, right? Because it's not a single-sided market. It whips around a lot. And NQ whips around, but I still feel it's a very one-sided market. Like, you will always have buyers in there. There will always be people who are trying to, trying to get with the uptrend. Just gonna let my Cavalier out because he is on diuretics and he needs to go out. Yeah, be back in a second. And we back. Yeah, so For me, I love the commodities because they are crazy and because that's where I found my personality to match the products the best. So, there's nothing wrong with equities, but yeah. I can see the question. DJ Run says, I thought Hogue said SIL would roll today, still not yet. Yeah, so on the CME, I saw that the contracts have rolled into May. Maybe once Topstep team wakes up, they might roll it. But I don't know, I'm not in charge of rolling contracts at Topstep. I'm just an on-air person. You'll need to ask someone whether that's going to be the case. So maybe reach out to someone in the risk team or something to give them a little poke, a little nudge. They should be rolling it. But here I'm going to go back to my copper. Right, so copper is in range, right? So this is now above VWAP, above 6 evens. Next pain point is around the Asia high. So we'll see what they do. But right now, this is a range. Do I want to trade it? No, because again, I'm looking for something bigger. Maybe if they wick it above Asia high again and the time of day is right, maybe that will be an option. But for now, this is all neutral day, middle of the middle, bouncing around in a range with very little profit margin either side. And why do I say that? Because this is your demand now, this is your supply, so we're coming into supply. So this whole situation here, from one pain point to the next is like 40 ticks. I need at least 100, 150 ticks in order to fit my setups in it. And if I only have 40 ticks to work with, that's just not enough for me. I'm sorry. It's a waste of time. Looking at gold, gold is probably the weakest out of the metals today. And as a result, it went into a value acceptance for London. So I've got the COMEX value here. Let's make this bigger. And let's put the marker for the shortened London session. So the way I do my value areas is to go from London Open until COMEX Open and just to look at that as an area of interest. Why? Because that's a distribution curve for London before the COMEX players stepped in with their paper contracts and ideas of what they're going to do. So this is why I'm going to do this. So what are we doing? Let's put a couple of lines here. So we already have one here. I'm going to make it purple because I like purple. So sue me. And then this is value low. So as you can see, here's the value acceptance. Why is it a value acceptance? Because one 30-minute time frame closed inside the previous day London value. What is the expectation and implication of that is that at some point you're going to rotate all the way to the other side or somewhere near. Usually when this happens for COMEX, you will find that these sort of pullbacks don't have much legs to the opposite side. So they're not a true mean reversion trade. Rather, they're just pullbacks so that we can kind of keep going down. But this is not COMEX. This is still a lower volume, almost out of hours situation because London doesn't really trade futures that much. They have other sort of ETC products. So they are usually called Wisdom Tree something, and they're kind of ETFs, but for commodities. That's why it's not an ETF, but it's an ETC. And then, so exchange traded commodities. So they are lower volatility, and they are the vehicles that are mostly traded on the London Stock Exchange. That's why you see gold and silver in particular do very little in the first 2 hours of London. Very little, if anything. They're just so range bound, watching paint dry, and then every once in a blue moon it's like, oh yeah, we're going up. But it's typically connected to sort of news or releases, some kind of unwinding of positions. So until really COMEX, I don't tend to look at silver or gold. And then, we start trading. But copper is different because it is a base metal. and it is traded on the LME, which we are going through right now. So if I pull down to a lower time frame, at some point we should see these volumes livening up, but you can see I've anchored it to the LME open, and they really nicely pushed it higher, very nicely. Copper does have this price fixing event that happens at 12:35 my time. For reference, it's 12:16 right now, and once that goes through, it's another pointer because you can get a very sharp reversal from that. So at the moment, I'm still not really that long biased. Yes, we're above VWAP. Yes, we're above 6 evens, but at the same time, I'm not super clear on what they're trying to do here. So that's usually, in my head, a range. Every time I'm like, what are they trying to do here? Like, are they going up or are they going down? And if you can't really answer that question, like with some pretty big certainty, it's usually a range day. That's how I learned to cope with it. And I sucked at ranges for many years. And then about 7-8 years ago, I decided to really put my efforts and journaling to figure out how I can get better at range trading, because I was either a mean reversion trader or a momentum trader, and to me that just wasn't good enough, because obviously vast number of days are range bound. In some markets, like 70% of the days tend to be a range, so not trending but rather a range. It doesn't mean that it won't close higher or lower on the day, it just means you're not going to have some screaming trend to one side with no pullbacks. So yeah, just keep that in mind when I'm giving some of my definitions of range. But yeah, for now I'm a bit of a no man's land, so just watching. This is quite a big glue away from the LME. This is do we have any CPI or inflation or something? Is that even coming out? Does anyone know? What is happening? There seem to be government shutdowns, then partial government shutdowns, then this and that. I don't see anything on the cards today. So yeah, crude oil inventories, boo, whatever. Barkin is speaking. Barkin is barking. Woof woof. At 2:30 my time, so that's right at the New York Stock Exchange open. I mean, we had the European CPI at 10. Not really anything that would massively immediately impact copper. I also looked to see whether the whether the supply and demand of actual copper is telling me anything, because as soon as the news hits that there's either a problem with supply or demand or whatever, they will almost immediately correct the price, and that usually causes extra volatility for this particular time of day. So for now, this is just chopping in a V-shaped formation, but we have the orientation point of Asia high, and you can even call this the London high. So sometimes what can happen is that they kind of expand that for COMEX and then they smash through London high and reverse yet again. So all of this is not really giving me high confidence that we have a very good sort of intraday swing opportunity here. For the intraday swing, I would need to see another failure in and around this soon. So slightly higher than that, wicking it maybe into 605, and then breaking down through Asia high, eventually showing weakness through VWAP and GEX1, and then you have a swing on your hands. But we're a ways off from that. And then on the other side, if we're going to have a trend, playing the devil's advocate, always have a hypothesis for both sides. So 6 evens is my sort of breaking point for the downside swing. To the upside, we need to stay above the Asia high and London high, and then you might have a trending day, which could bring us to 610, which is another good area. Now, gamma flip level is all the way down at 590, so I think we're just going to be in positive gamma most of the day. Why does that matter? Because positive gamma means more chance of mean reversion. So it could be that at high probability times of day when I take my setups with like 70-30 probability rather than now, which is more like 50-50, maybe there's a case to to say that if it goes quite high up, that we have maybe a COMEX fade into settlement, but that's going to be very late. I am going to be on group coaching later today. Fingers crossed that I fixed my computer. I had to rebuild everything, and that it should be good to go. No reason why it should have issues now. But yeah, last week, or whenever I was on, Monday I think I was on, God, days are melting into one another. It was just totally unworkable, and I was so annoyed. So I just trashed my entire machine, rebuilt everything, and there's no reason why I shouldn't go back to working how it was working like 2-3 weeks ago. So we shall see. But yeah, so a bit of a no man's land on copper. Crude oil, maybe bullish. I mean, inside bars upon inside bars upon inside bars, that's also not really grabbing me. 65 is really where I would like to see it, or alternatively 67. So those are like two big points. And notice that when I do see inside bars, I'm not going, well, 66 could be an orientation 65. Yeah, if I'm already in a trade from 65, let's say I'm long, 66 and 66.50 can be my URA loops, a part of my OODA loops, right? Observe, orient, decide, act. But I'm not going to be entering here, because it's like, you know that there's a nice hanging fruit here at 65.46 where they made the London low. So usually that's like taken before they do anything more serious. And whilst I'm watching crude oil, I do remain bullish on RBOB, right? So just keep that in mind, because there is, like I said, a seasonal tendency of RBOB to start trending now upwards, and then that carries on until May. When I look at crude oil in the larger time frame, if it comes to any options trades, I really don't want to touch this until we get to 70.21. At that point, I'm going to start monitoring the options chain to see whether I can find some way to enter a short call. And obviously that also means that I'm not neglecting any sort of fundamentals that could push it even higher. But the true originating supply on the weekly time frame is 73. So it has all of this that can go horribly wrong. And because at the tops, I do like to do short calls, because I do keep them for quite like sort of 2-3 weeks, 4 weeks, 5 weeks sometimes. And I want to benefit from theta decay as I'm doing the short call. So yeah, because it's a more risky strategy. Obviously, you have to be a little bit more careful with how you will position yourself. Right, let's have a look at chat again. Joe says, did you look at IB for a London Metal Exchange? I don't. I really don't. I just look at levels. So I don't go, well, this is the LME, so now we go. I have Asia high, Asia low, right? That's more than enough. Now, the reason why we look at COMEX initial balance is because that is a pretty high volume day or time of day. And you need something else to figure out where you're going to get in. LME is not like that. LME is a lot more muted. So even though it's heavily traded, it is still not necessarily something to kind of anchor your initial balance to. Because by the time that they've made their movement, if you don't have any setups already, you know, slightly pre-LME or about an hour into it, the LME is going to be doing whatever it does, and then you have that awkward period of the pre-market, which it's tradable, but it's like from the difficulty standpoint of figuring out situational awareness, it's probably like on a scale of 0 of like 1 to 10, with 1 being easy and 10 being hard. I would say it's like 7, because the probabilities at that time of day are not as strong as they are in, like, let's say a post-NY cut period or London close or COMEX fade. Those times of day carry about a 70 to 80% probability that some kind of hedging is going to happen into them. This time of day, it's very early. And another thing, whenever I'm doing my options trades, I usually open them very late in the day, like almost at the end of the electronic trading, because I don't want all of that volume and stuff to put a wrench in the works. So therefore I want to be in, particularly on crude oil, at the time of day when I know that Asia is probably not going to do that much, but it may cause that Tom and Jerry chase where they kind of chase each other. The sessions chase each other. So if you've gone up in let's say NYMEX, and then Asia comes in, they usually take it back the other way. That gives me some distance from my entry to the next morning, and I can then maybe be in a slightly better situation to survive any future wiggles. And then when London comes in, it typically tends to take it the same way as Asia on crude oil, because it's not like, oh yeah, like metals. You have Asia high, Asia low, and then London steps in, then they reverse it, then COMEX steps in, they reverse it again, then Asia reverses it yet again. It's not quite like that. So crude oil has a lot of moments where it just does nothing. But I remember that I only use crude oil for options, and I use it as a benchmark for RBOB. I do not trade crude oil intraday anymore because it's just not worth it. Until we get like 2-3 solid months of every single day, 250, 300 ticks, 250, 300 ticks. I start seeing the old crude oil come back, I've got nothing on crude oil, apart from a level. Everything else is just me expressing the views on that particular sector in something else that moves a lot more. So 500, 600 ticks a day. But LME, initial balance, not quite big enough. I do use the copper fix, which again is VWAP. It's not the time like silver fix. Like silver fix doesn't use VWAP. It's like silver fix is whatever time we were midday. That's it. That's your silver fix. Gold has two, so it's got the AM fix and the PM fix, and that's also price based. But then when it comes to this one, for some reason, LBMA started using VWAP tools to figure out the benchmark price on the day, which is what the price fixing is. So you need before you ask, I'm going to answer it, what is the price fixing in metals? It's the price that the institutions and effectively sellers and buyers of the commodity use as a benchmark to quote it on the day, right? So there's a silver fix, there is a copper fix, and gold has two fixes because, you know, it is gold, so everybody wants a piece of it. And those times can add the reversal. So this is why I don't like trading before that goes through, unless there's like something super obvious, which it isn't today. And I will say, while I've gotten better at range trading, I'm still not like, yeah, like I'm not Dolby, right? So I'm not like, yeah, I smash ranges. That is my strategy. It is there. I'm decent at it, but I wouldn't be seeking out a range day if I can help it. If I'm being completely honest, it takes a lot of work. You have to sit there. You have to watch price action. I'm like, my swings are easier. JV10 says, thank you for streaming during US pre-market hours. You're very welcome. Was291 says, Ms. D, how many years... Oh, Marcus Stoker D. Ms. D, what am I doing? Marcus Stoker D, how many years did it take you to become consistent? So, here's the thing. Are we talking profitable or consistent? Because those two are very different things. You can be profitable, but still have a lot of Muppet moments along the way. Now, initially, for the first sort of 4 years, I would say, I was pretty profitable. Did I have moments of mistakes? Yes. Did I still manage to get to a 6-figure account? Yes. But was I consistent? I would answer no. And I'll tell you why. Because it's not really something that you will find quickly. Because you have to live through so many different market conditions. You have to live through some black swan events, which we've had a few recently, really. And then you have to live through the quiet periods. You have to live through a quiet period that's so bad that you have to change products. And whilst that's changing, whilst the markets are changing, you suddenly find yourself in a pickle because you're like, bloody hell, I can't find a trade that works for the life of me. What is going on? And then you start to go into these like coping mechanisms. And for me, coping is journaling. And that part, I would say it probably took me half of the amount that I was trading, let's say 9 years, to like really understand, even if I get in a drawdown, why it's happening, what I need to do about it. And I'll be honest, crude oil caught me in 2024. It caught me because I've been trading it since 2013. It was always liquid. It was always beautiful. Loads of movement, loads of opportunities. 2024 rolls in and it dies a death. I'm talking $1 ranges that we see now. If somebody told me back then, like during COVID periods, during 2013, 2014, 2015, if somebody told me, D, there would be a day when crude oil is considered slow by the trading community, I'd be like, yeah, get out of here, man. But it happened, and I could not believe it. I would be entering my trades that I've been doing, for whatever it was, 10, 11 years at that point, on crude oil specifically, and I'm like, there's no movement. There were times, I'm not joking, when I was looking at my internet and going, is it on? Like, is my connection down? Like, was that, like, not moving? We're talking, not even a single tick goes by. And then after about 2 minutes, it goes, bloop. Almost like, oh, it's not dead. And that's when I started joking with Andre. Yeah, what's going on with crude oil? Someone poke it with a stick? Like, is it alive? Give it a prod. Is it moving? And frankly, I'm still seeing a lot of that. I see that it sometimes kicks up, like somebody livens it up, and it's almost like somebody gives it a line of an illicit substance, and then it's like, oh, and then it jumps. But very quickly, it comes back where it started, and it's just like DED, dead, yeah? And it's still like that. So here we are, 2 years. So what was I to do? So stick with crude oil, be tortured, and say, oh, I suck at trading. No. I was like, what else is moving? And what is correlated with crude oil? And then somebody suggested RBOB. And I was like, oh, yeah, crack spread, gasoline futures, heating oil. Why am I not looking at that? And I then started shifting my attention. And this is why we say it's a never-ending growth, right? So at that point, I've probably been trading for, 17 years or something? 18 years? And I still got caught by crude oil lack of liquidity. So you will always be in that situation where the markets start changing for whatever reason. It happens and whatever. And okay, so we are starting to. Let me have a look at Bookmap for a second. All right, so we had a bit of an exhaustion. This volume is still not exactly kicking above the moving average of the volume itself. So in order for me to have any kind of a smooth movement, I really need more volume. Need it to go up to 11. If you've ever watched Spinal Tap, you will know that reference. But again, maybe I'm dating myself. So LME VWAP is being tested now. The trouble is we don't really have too many options levels here. So at 6 evens is still. So if I were to say, well, my initial hypothesis, one of them is a short and a breakdown of 6 evens because gold has been weak. And gold on a 5-minute chart has correlated now with copper by almost a factor of 1 almost. But it would be more of a guess because we're in the middle of this distribution curve. There's a point of control here and it's like, ugh. However, whenever we have a neutral day and then we never go above Asia high early, there's a chance. There is a chance. Then we go down. All right, so Delta is dropping. I'm going to try just a core position here. I'm not going to be necessarily scaling in. Let's just try it, right? We've just had one of the volume bars go above the average. And if we can get outside of the initial balance low, then maybe, just maybe, we take out this low. So this is probably quite an aggressive target for this time of day. But we've had some bigger players that have just stepped in. It's been pretty quiet since this morning, which is why I didn't really do much with it. But right now, they're starting to come in. So now we need follow through. So go back to the 5 minutes. Trying to exit initial balance low. The access to the downside is located at 6:25. So it kind of starts here. You can maybe see it better. No, it's 6:005. So it's here. That's your access. It's basically a buying wick, right? It's just called a selling tail or buying tail. This is a selling tail up here. This is a buying tail. There's a lot of tails in market profile. It's a very animalistic way of looking at things. So is it gonna wag its tail at us, or is it gonna break down? I don't know. But yeah, so don't really want to be long here, because we never went back up to test Asia high. That could be a sign of weakness. And gold, if we go back to gold, as you just see, is battling its own VWAP. So if I go to a 4-hour time frame, we're sitting with a bearish engulfing retest. So I call these the conterminus lines. So when you have something that turns around into a bearish engulfing, it's a 2-bar reversal pattern. It is the start of creating a technical supply. And then that point of market shift, where at one point they were looking even, one of them goes lower. What does that represent? It represents a market shift point. So those tend to get retested quite frequently. That's what is happening here. Now, if it carries on higher into it, that's obviously not really what we want to see. We want to see weakness. And I'm just going to take a gander into GC order flow as well. Okay, so there are some buyers in there. It's not that ideal, but the delta is still overall negative. However, they are somewhat responding to potential absorption, and somebody's covering some of their positions. So let's see. Let's give it a chance. Let's give it a chance. I'm going to stay at a 4-hour time frame on gold because I don't want to lose my eyes. And another point, yesterday 5200 was a gamma wall. Now we're actually a little higher. So the new gamma wall today on gold is 5220. Asia high was created at 5230. So if they can't really go above 5200, it's not a bad area to get involved for yet another short. It's not like the best area, but this is what we're working with. So just trying to figure out what they want to do with it and then going along with it. On the 30-minute time frame, the correlation between copper and gold is not that high. 5 minutes, yes. 30 minutes, they haven't quite caught up yet. It's only 0.4. So if copper reacts to any kind of upside here, it's probably going to be a little limited, and then it's going to take time for it to kick up into an uptrend. But we'll see. Always tricky whenever you're getting involved in the middles. Those are very difficult trades. Not impossible. They are valid trades, but you have to kind of derive context from, oh, what's happened prior, and do we make it there? Do we not? And right now I'm just using the failure of the auction at Asia high after a wick through, and the fact that we never actually went back there. So I'm thinking, just kind of taking you through what my thoughts are here, that we may retest 6 evens at the very least, and then maybe we decide what to do with this. But at the moment, 5200 on gold is what the reference is for this particular trade, even though it's not a super high correlation, but they're definitely fighting. So are they Are they underhedged? This is the question with this move that gold has made. And it is a positive gamma. Environmental gold, positive gamma would change at 51.70 roughly. So somewhere here. If we go below that, then you have a negative gamma regime. And then things can get a little more crazy and more directional. And like I said, I won't be scaling into this because it's a bit of a crappy location. It's the only thing we have. So we just wait. However, we've gone below the LME VWAP. So for now, that's as good of a direction as I can read it. Next step would be if we start to go into those single prints. So that's at 6005. They start here. So I'm gonna make that sort of like a grayish color. And I am gonna say excess single prints. Full screen, D, full screen. Let's go down to 5-minute chart on gold as well. And you can see the slight lack of correlation. This one was bullish, the previous candle was bearish on copper, so that tells you it's not super strong. Alright, the delta is chilled out on gold. Doesn't mean that they will stop, but it does mean that a little bit of a delta divergence is happening where we are trying to push into a new localized high. But so we're trying to push into a new high. But for now, delta is not following that. So how can I see that? It's on Bookmap. So you can see that this is going higher, this is going lower. You don't want to see that when the price is in like a real trend. And of course they can kick back up the cumulative delta, but whenever I see that, I'm always like really suspicious of the move. So now we just need to sit and wait. It's also coming into a localized area of pain, where a lot of sellers were located. This is also value area high. So all of this is a little bit precarious for further movement. Right, so we have another sort of 18 minutes here to hang. We'll see if we can get any sort of momentum to the downside. Or at least a retest of 6 evens. It's not going to be the biggest trade in light of the market conditions. Right, let me focus my attention on chat here. Brad says, gotta head to the office, see you later. Awesome. Brad was one of my VIPs in season 2? Was it season 2? What happened to Topstep initial balance levels? Have they been removed? No, they're just only for regular trading hours. So they won't be covering it for London and everything. They're there, but you need to wait for JD to wake up because he's the one who does them. Contrary to popular belief, it's not some automatic thing that that we have hiding the third-party indicator from all of you. It's not like that. It's literally a spreadsheet. JD wakes up, and then he inputs the data from a spreadsheet into the Topstep levels. String is a string, and that shows up. So until JD is awake, you won't be able to get. And I don't think they do IB levels. I think they just do value areas from the previous day. But it's only going to be on equities mainly, then maybe crude oil and gold. They don't typically do levels for odd products because I'm known as the weirdo who trades things that are a little bit more unusual. To quote Mick from the risk team, whenever I was on with him, he was like, "D, you trade the weirdest products like ever." Like, yes, thank you. I do. I like weird. Natalie Mercer says, "Coach, if I may ask, how to stay emotionally stable? I made 3,600 in 2 days and rolled back." Rolled back meaning what, Natalie? You lost it, or you stopped trading? Like, what does roll back refer to? Davey says, "Why the MHGK and not the human growth hormone?" It's because we rolled into May. So we were trading March, but this is now rolling into a new contract because this is futures, right? They have monthly contracts in commodities, but usually metals roll for like 2 or 3 months ahead. And that happens because of the delivery requirements of the users and producers of the commodity itself. So it's not always going to be every month, right? But for crude oil, natural gas, and RBOB and heating oil, they roll every single month. So you really get like maybe 3 weeks of good price action, and then it's watching paint dry time, or probabilities get all skewed and you just need to sit and wait. All right, let's see if this is going to be an early exit here. They're retagging VWAP now. Gold has not really yet made a commitment to the upside. Not yet. They're fighting at 5,203 and 5,200. Fighting. They've got their boxing gloves on. They're trying to emulate Dakota. Alright, let's go back to a 30-minute time frame here, just to make sure we have the full context. So 30 minutes still a little bit bearish here. Very range bound. Very range bound. Copper also seeing a bit of a cumulative volume delta divergence. So let's give it time because of that. It's kind of going into a localized higher high, but delta ain't following. However, the bubbles are small, so that means that not too many big players are around here, and it doesn't really surprise me. So let's be the little fish in the pond here, trying to shoot for a retest of 6 evens. And I'm also going to scan through some larger time frames. A similar thing here. Bearish engulfing, very spiky on copper. And next level of demand, sitting at 597.50. Yeah, let's say 97.50. Just to just jumping through time frames to keep an eye on things. A little bit of selling at the LME VWAP again. We're just going to see if I have any sort of a bigger volume that I can... No, it's really nothing. So sometimes when we have something like this sort of market flipping you off volume bar, you can actually anchor the VWAP to that and then see how the price acts around it. And actually we're just hitting that. That's interesting. Yeah, so I'm going to stay on this for a little while longer. But yeah, that one was from the smash through the Asia high. That's when you can expect to see them. So if this, so let's talk early exit strategies. If this goes up and closes above, I would say 60250, but not on a 5-minute chart. If it does that by the end of the stream, so in 10 minutes time, that will be an invalidation. So again, I do my decisions based not on 5 minutes, 2 minutes, whatever. I do them based on how the TPOs close. And if it's still up here, I'm going to close it. If it's still alive, you basically exit early, but you do so systematically and on schedule rather than drawdown and close it. You do it systematically. I exited yesterday early in profit on RBOB because I saw something that was no longer favorable for shorts. But then I caught another short later on that was basically the same idea. Rejection of 225. And yeah, so if this is really a short, there will be another way to enter a little bit later. But for now, I need to wait for another 8 minutes and then I'll decide what to do. But copper is lively today, man. Gold is not, it's not really the cause of this move. This is just copper. So this would be LME. This would be LME trading. They've decided to push it up after the fix for whatever reason. What did I just do there? Nothing. Okay. So if we're still alive, we close it in 8 minutes time. If it's not alive, we have a stop, and then we only eat up a small amount of 275. So very, very easy to get out. And that's what I mean. Like if I was scaling in, so let's just analyze how this scaling in versus staying on the core position. If I am scaling in, I don't even start until this is like 10 or 12 ticks in profit for one. If it carries on, I will tag myself into 5, 6, 7, 8, whatever is currently available and or within the risk model according to the balance. But if the trade never actually does what it's supposed to do, goes into profit, what's going to happen? You just stay on one, on the core position. So I only stay on 4. That minimizes the drawdown, right? So you can see how I'm trying to like tighten things up. And I did say this was a bit of a sketchy price action here because of a range. But again, I stick to my rules. And we're going to be only exiting if the TPO, A, if we're still alive, B, if the TPO closes above 60250. So I'm going to put a marker for that. Just a little marker. So yeah, so the any kind of trades that you find at this summer day, like I said, there are 50-50, but I choose to do like more mean reversion trades because they tend to have more MFE, whereas the continuations, you might squeeze out like 30 ticks out of it, and that's it. And again, that's not what I look for. So I would rather be on the side of a trade that has more profit margin inherently than the one that is a little bit meh. Alright, so tagging IB high. So they are now sitting right at the initial balance. And we've got 6 minutes to hang together. And then I'm going to bounce. So let's sit and wait. Gold is showing a little bit of weakness here. But again, correlation between the two, not quite enough. Not quite enough. And this is going to be a range bound situation where I took the entirety of the range. This is where you can see the range trading would be better, right? But me being the mean reversion trader, I'm like, oh yeah, no, I'm looking down. And then you take the entirety of the range. So this is something that is my weakness. And this is something that I've been trying to lock down by using a smaller position initially, right? But if I was kind of like analyzing this in hindsight, like, oh yeah, of course it's going to retest the Asia high. It's like, yeah, but in real time, you're thinking, Actually, yeah, you'll probably, like, if you just get a small push, there's always that side of things, and then you get it wrong. But I can see what's happened, right? So I can analyze the problem, so range bound situation, me going for more of a bigger trade, mean reversion, expecting it to go lower, so that's on me, and it going back into a range bound motion, and me taking the majority of the range. So this is something I'm fully aware of, so you don't need to tell me. But yeah, so usually what happens at post and my cut, which is the time when, you know, you get more probabilities generally, you get the reversions. They just kind of keep going because there's obviously a lot more volume. But at this time of day, it's all still a little bit sketchy. And interestingly, copper and gold are now completely different. So as you can see, gold is doing what I expected it to do, to go into another bearish candle. But copper decided to diverge, and the correlation fell again. So this is the correlation with gold. It's now only 0.3%. 0.3 correlation. So now this is where the stops will save your ass. We've got 3 minutes to hang together and 3 minutes to give this to work. Again, if it's above 0250, I'm going to shut it down and then come back after my 3 p.m. for a better situation. And my dogs are back from daycare, so there's going to be some screaming very soon. How much loss are you in currently? Minus 177 with commissions, so minus 75. 175. But not much. Very minimal. Very minimal. Andreas, it's a real quick question. Does rollover a period affects the way you see metals moving on spot charts too? No, because spot is spot, right? So it doesn't have these jumps in prices and stuff. It's different because there's a thing called the basis, which is the difference between futures prices and spot prices. So they're not exactly the same products. Rima, can we stop with the moaning, please? Would a quick buy above 11.25, around 5.95.15 candle be a good idea? What product are we talking about? 5.95. Because we're at 6. So I don't... Are you in the old contract? You need to be on the new contract. Oh, Natalie says I lost it. Natalie, I would say that you're probably too oversized. Because even if you get smacked in the face, it needs to be controlled, right? So even if I eat up this entire stop, I'm still only minus 275. Not 3 grand, not 5. Like 3 grand I might lose in a day if my account size is like 30, 40, 50K. And I would call that a tilt. But if you're less than that, and if you're working with the initial 4.5 maximum drawdown, you have no business losing 3K in any single day. Because you're losing effectively, what, 70% of your available balance and working capital? Is that a good idea? No. But, you know, this experiment here for me is very important to test the downside as well. Now, as it turned out, when I started this, I suddenly got on a streak. And I'm like, that's not the point. So how do I see downside? How do I see downside? And then I had a bit of a Muppet day here where I was messing around with my computer and trying to test silver out. Obviously didn't work. And then 2 days ago, this was more representative of what the actual downside is. So you're basically trying it. Maybe you're up, you're a bit down, you're up, you're down, you're up and down. Overall, you end up down on the day by 500. So that is kind of the point of this. And I was still quite a bit in profit. So maybe 10%, maybe 12% is what you should be counting on, but no more. All right, Asia high being tested. We've come to the end of the stream. I do have to bounce to make way for the daytime show. I mean, this is nearly a stop, but we're closing it down. So we're taking a loss of 249, saving a little bit of money on that stop loss, waiting now until 3 p.m. for another opportunity and see what they do around this Asia high, even though this would now be a perfect range trade, wouldn't it? But we didn't have that half an hour ago. Anyways, accept your losses, love your losses, especially if they're controlled. I will see you a little bit later. Enjoy the daytime show. This was the Metal Markets. I'm Marcus Tucker D. I will see you soon. Take care.